Welcome to Practical Steps to Evaluating Your Financial Software ROI. We've all seen models that calculate return on investment, right? They can be difficult to use or unrelated to your business. So what we're going to do today is give you a very practical way to evaluate where you stand. I'm Gina Sponzilli. I'm an industry marketing manager here at Sage Intacct. I've talked to customers like you who moved from Sage 50 to Sage Intacct to understand the path they took and their ROI. Before we start, I want to highlight a couple things we have here. Take a look at those resources we've included for you. Submit a question or two as we go along, and we'll tackle them during the webinar or follow up with you directly afterwards. We also have a short survey at the end of the webinar, so please fill that out and you'll be entered to win a pair of AirPods. Here's our agenda for today. I'm first going to share what customers have told us about the reasons they switched to Sage Intacct, and then dive into the elements of an ROI calculation, using the actual returns our customers achieved as our frame of reference. More importantly, we'll show you how to determine your own ROI. This is meant to be a starting point, something that you can tailor to your organization. It will help you evaluate your current costs and the potential savings of cloud-based software, so you can see if a move to the cloud or to Sage Intacct makes sense for your organization. Now let's take a look at these three different customers. It's clear that they've achieved great things, right? Naturally, there were also challenges, though, before they got there. As CTI's business grew, they weren't able to manage their increased transaction volumes. Cloud access was another issue for them. Because of that, they had data in multiple software applications like project management and time tracking, which required duplicate data entry. For next step, limited visibility into things like cash flow and limited reporting hindered their growth. Logging on and off separate instances of Sage 50 was time-consuming for the team as well. For Monterey Peninsula Foundation, they weren't able to report on which fundraisers were the most successful and efficient, which was something their board was demanding regularly. Plus, they had a painful close. With Sage Intacct, not only did the accounting team see improvements in AP and reporting that you see here, but they also slashed their monthly close by 40%. On top of that, their overall efficiency gains resulted in annual savings of $80,000. We'll dig into the details of this a little later, but keep in mind that while your situation will be different, and we understand that, and your ROI will also, there is a path that your peers have already taken, and you can use that to help guide you as you look at whether you're outgrowing Sage 50. And that's what we're going to talk about next, these top signs that you may be outgrowing Sage 50. We've talked to a lot of customers, and across the board there were similarities, and so we've been able to identify that, and let's dig in now. So now consider whether any of these sound familiar to you. When Next Step, CTI, and Monterey Peninsula all outgrew Sage 50, they got to a point where they couldn't maintain the status quo. And like other customers, there wasn't a long laundry list of issues. In fact, most customers who graduated to Sage Intacct only had one or maybe two of these issues bubbling up. Let's go a little deeper and see why companies start looking for another finance and accounting solution. As we talked with customers that made the decision to graduate to Sage Intacct, 4 areas emerged as the most common shared pains. The first 2 we're going to look at here are too much reporting in Excel and long closes or multiple entities. Now think about those day-to-day headaches you may be experiencing and ask yourself, is your reporting holding you back? I'm going to give a minute for you guys to think about that, and feel free to write your comments or questions into the chat there. Okay, well, when you do too much reporting in Excel, spreadsheet errors become a big issue. Even changing one number is a problem. And because there aren't any centralized reports that everyone can turn to, and no way for the system to alert other users, multiple people spend time creating their own reports. Not only does this mean that multiple people across your organization are spending valuable time tweaking the same reports, but it can also lead to confusion over which spreadsheets are the most up-to-date. The more hands that exchange and tweak that information, the higher the likelihood that the formulas will break or information gets distorted. So how confident are you about the accuracy of your reports? If you don't have high confidence in your reports, presenting at board meetings or with other leadership can result in different people presenting different numbers. That can then lead to confusion or embarrassing exchanges with the board. What about linking your sheets or blowing up your chart of accounts? There's just a lot of potential issues here. When we turn and look at the multiple entities, even if you don't have them now, you may in the future as your business grows. So consider that since each entity operates as its own instance, it can take at least a day to do customizations. It can actually be like a re-implementation each time you need to add an entity. The close can get dragged out with complex consolidations, and without a shared chart of accounts, you need to manually eliminate entries to account for inter-entity transactions. Now here's another Sage 50 switcher I wanted to talk about today with you, and that's Whole Family Health Center. They're based in Florida and provide primary care to roughly 1,500 patients a month. They found the reporting limited in Sage 50, so they would download the reports to Excel and do a lot of manual work just to build one report. That led to inaccuracies and time lags where they couldn't provide the reports that the board of directors wanted in a timely manner. For their close, they always had a month-end rush to reconcile bank transactions and manage journal entries. I'd imagine that's something you might relate to as well. So you can see here that the tipping points were in reporting and monthly close. And while every organization will have its own unique tipping points, you can see why the finance team at Whole Family Health decided to look for something new. So now let's move to the top signs you're outgrowing Sage 50 vis-a-vis on-premises limitations and manual processes. These are the other two top pains Sage 50 customers consistently talked about where the status quo was holding them back. One customer we talked to had a treasurer who lived 300 miles away. So sending checks via FedEx every week was costly, and that really added up quickly. Another had to print out and physically walk POs around the office in order to get all the necessary signatures. And of course, if someone wasn't in the office that needed to sign off, that delayed their process. Another had their DSO ballooned to more than 50 days because they were manually generating so many invoices. Maybe some of this sounds familiar to you, but I think it's clear that manual processes really can negatively impact your ability to efficiently grow your business. As for on-premises and closed-off system issues, they're especially relevant right now as companies consider where and how their employees will work, whether that's a hybrid of in-office and virtual or some other setup. There's also the issue of upgrading on-premises finance software. Those upgrades can feel like a re-implementation, and any kind of integrations you need to do can be expensive and difficult to build, may even require you to hire an outside consultant to do that, and that can get even more expensive. We've also heard about performance declines as users and transaction volumes increase, as well as a few customers have said that their system crashed and they lost all their financial data in the midst of doing an upgrade. Now let's talk about Monterey Peninsula Foundation. Earlier I talked about the many successes they've had with Sage Intacct. I really did want to take a little bit more of a detailed look into their top pains and their tipping point. First, running reports in Excel just took too long and resulted in too many errors. Second, the board wanted more sophisticated reporting on the profitability of their fundraisers and to better manage grant funding. Third, the finance director spent too much time hunting down invoices and other paper records, doing invoice approvals, and cutting checks manually. But the tipping point really came when they hit 3,000 invoices. That's when their existing finance team maxed out. They would need to add another person to the team or automate their processes. So now when you consider your own situation, whether it's 1, 2, or a few of the signs we reviewed, you don't need to see all 4 signs. Even 1 or 2 could mean that it's time to consider a move to Sage Intacct, just like Monterey Peninsula Foundation did when they were unable to manage and generate 3,000 invoices. So far, we've talked about some of the amazing achievements of our customers who saved hundreds of hours with Sage Intacct. We talked about the top signs you might be outgrowing Sage 50, and now we're going to shift our focus to the benefits of Sage Intacct. You'll see here that this is a mirror of the top 4 panes covering reporting, multiple entities, cloud, and automating financial processes. Now don't worry, I'm not going to read through the slide in detail. You can do that. Really, the point here is to get you thinking about some of these things and the impact they'll have on your business, as we've already seen the big gains Sage 50 graduates have achieved as they add up their time savings and the other benefits outlined here. Remember, these aren't numbers we came up with. They're numbers our customers have shared with us, such as reducing audit times by 50% or integrating with other systems at 1/10 of the cost. So now, as you start thinking about your potential time savings and process improvements, here are a couple questions to think about. How much time could you save being able to generate reports immediately and across many different dimensions at once, like location, product line, or things like that? And what about cutting your close by 50%, 60%, or even more? How about saving time on manager approvals or no longer needing to rekey orders? Then think about what all that saved time adds up to in terms of labor costs. And can those time savings be reallocated to higher value activities like strategic business analysis or perhaps doing a deeper dive into new product lines? They're all important things to consider. Now, I want to quickly talk about 2 customers to highlight what we just reviewed regarding the benefits of graduating to Sage Intacct. You see, the first one here is AgeMark Senior Living. Before moving to Sage Intacct, they had 25 different entities with disconnected finance operations. Their manual processes were costly and error-prone, especially since they had duplicate vendors and invoices across their locations. Because the company had inconsistent workflows between their facilities, there was a lot of frustration and, unfortunately, turnover in the finance department. As you look at the achievements now, I want to add a few details to that first bullet, because multidimensional reporting has been a real game changer for AgeMark's business. Now, the finance team can produce hundreds of reports each month on demand and track metrics that used to be impossible to track, like supplies across departments, supervisor hours versus assistant hours per resident, and resident costs per services received. All of this has helped them achieve that 250% growth you see here. Now think about what would be some helpful metrics to track for your business. Please feel free to share that in the comments section. Let's talk about the second customer, Crossref. The company is a global nonprofit publisher with about 5,000 members. Before Sage Intacct, they couldn't identify services to add or remove because they didn't have enough visibility into business performance. Basically, the leadership team oftentimes used their gut feelings to make decisions. The finance team was bogged down doing duplicate data entry and tedious Excel-based processes. With Sage Intacct, the leadership team no longer bases its product strategy on personal opinion. They can look at concrete revenue, expense, and usage figures for each product within Sage Intacct. Now they make more informed choices about which services to add, cut, or maintain based on their profitability. One key thing I want to highlight here is their annual savings. By automating tasks, the finance team isn't spending their valuable time on basic financial processes. And in turn, that saves the company $45,000 each year. Not 1 year, but every year. Keep this in mind as we move to the second half of the webinar, where we talk about savings and computing your return on investment. First, I want to quickly say thanks so much to all of you who've stayed with me so far. This second part of the webinar is more nuts and bolts. We're going to dig into some details about total cost of ownership, or TCO, and also financial software payback. At the beginning of the webinar, I showed you those impressive results that CTI, Next Step, and Monterey Peninsula Foundation achieved. One thing I shared was CTI's payback timeframe. It was less than 4 months. That's the time it took for CTI to achieve payback on their Sage Intacct software subscription. So now let's talk about how you can evaluate your own potential savings and payback. This is the first step to evaluate your TCO. You can think of it as the fully loaded cost for Sage 50. We put together this chart to give you a more complete picture of the things to consider when you do your own evaluation. There's quite a bit to see here, so I want to just highlight a couple things. The low, mid, and high ranges you see here reflect the cost in 3 different cities for colo, power, and an IT professional. Now, this is with the IT professional spending 10% of their time maintaining the system. We found that most people who go through this discover that their TCO is 2 to 3 times the cost of their Sage 50 software and support alone. So what do you think? Maybe you're somewhere between these three totals. High end, low end? Either way, keep in mind that these amounts don't include upgrade costs you might have, like tech support or added servers. You may also want to include costs for data backups or data recovery. And these amounts don't consider the cost of integrations either. It can be very expensive to build the workarounds you need to connect your Sage 50 instance with other essential systems. So don't forget about added, potentially hidden costs. Wherever you might stand, you want to make sure to accurately evaluate your TCO before you go to the next step. Now we're moving on to step 2, monthly savings. This is a key step in your payback calculation. Take a look at the actual time savings Sage 50 graduates achieved when they switched to Sage Intacct. You can see the different accounting activities where customers saved whole weeks of time. When customers calculated all their monthly time and money savings, their investment payback was less than 6 months. Take a look. There are probably 1 or 2 accounting activities that apply to you, or maybe even more. When you calculate your specific time savings, consider these questions. How much time can you save by eliminating manual processes like manager approvals? How much time saved by not having to rekey orders? Or how about how much time you're going to save by cutting your close 50%? And what do those hours saved equate to in terms of monthly savings on accounting staff? Keep in mind that what you're seeing here are hard numbers for specific accounting activities. Your savings could be more when you include things like efficiencies gained or the value of reallocating time savings to strategic analysis. Rhonda Rogers talking about the 500 hours saved annually with automation. Next Step's accounting team used to spend a lot of time passing around hard copy invoices, matching them with backup documentation, hand coding general ledger accounts, and then physically signing checks and scanning everything into a third-party AP system. You know, I've heard this a few times, and one person actually said they felt like they were being buried in paper. Looking back here, the Next Step team can view all outstanding invoices on a dashboard in Sage Intacct, and the system tracks online approvals from assigned department managers and accounting before each item goes out for final payment. Their process is more streamlined, and that allows the team to work on more strategic projects. Turn to some of the operational improvements that also have real payback value. You know, we were just talking about Next Step. Here's another way they were able to achieve payback in less than 4 months. They greatly improved their team's efficiency. Monterey Peninsula, Crossref, and the Nashville Zoo also translated their efficiency and productivity improvements into values they considered in their payback calculation. If you're wondering what efficiency gains refers to, it's a smoother, shorter close by up to as much as 80%. Automated inter-entity transactions, currency conversions, and local tax reporting. You know, for one small investment company I talked to, it was the efficiencies alone that tipped the scales towards Sage Intacct. He told me, we looked at the efficiencies that we gained from multi-currency, multi-entity, consolidations, and remote access. We knew that all these advantages do pay off. Even if you only consider one of these value adds, it's going to shorten your payback period. Here we have the CFO of the Nashville Zoo talking about time savings as well as operational improvements. I want to share their inspiring story. The zoo was able to successfully manage through their COVID-related shutdown. The ability to report on multiple dimensions, like spending by vendor and cost per animal, was key. And the zoo's fundraising team got the financial insights they needed to create new donation options, like feeding a giraffe for a month. I'd love to feed a giraffe for a month. That sounds really great. So thanks to these types of smaller, meaningful donations, they funded most of their necessary operating expenses this year. They even expect to slightly increase their overall budget next year. I think that's just so amazing. What a great story. Now it's time to bring it all together and talk about Sage Intacct software payback. As you can see, Sage 50 customers who switch to Sage Intacct typically achieve payback within 2 to 4 months, as we've talked about earlier. Now let's take a closer look at what we have here. We talked to a variety of customers who switched to Sage Intacct and helped them calculate the total cost of ownership for their on-premises Sage 50 software, as well as their cloud-native Sage Intacct software. And earlier, I showed you the low to high total cost for Sage 50. Your own organization's Sage 50 TCO will probably be different. Now, the 1.2K to 2.5K you see in the first part of the equation is the monthly incremental TCO range for that extra expenditure for Sage Intacct after accounting for Sage 50 total costs. That's an important point. To accurately calculate your payback timeframe, you need to use the incremental cost of Sage Intacct. The costs for Sage Intacct depend on the customer and their specific requirements. On average, it's about 2K to 4K per month. So after you come up with your monthly incremental TCO, go to step 2. Add up all the time savings for your organization's accounting activities. We took an average of 5.5K to 8.3K. That's based on the actual savings we reviewed earlier. When you account for those savings, you can see that payback happens fast, as we said, in about 4 months. And as I mentioned before also, these savings are ongoing, year after year. What we're showing you is the estimated payback for software subscription. Payback on the installation costs will follow. This calculation here is to give you a jumping off point based on the experience of your Sage 50 peers, so you can start thinking through where you stand now and where you can get to. I'm guessing there might be a few questions out there. Feel free to put them in the chat, and if you have time, we'll go over them. Otherwise, I can follow up with you directly. I'd be happy to. We're bringing together the first and second part of our conversation. It's a mini business case. We understand that every organization is different. At the same time, we hope your peers' stories are helpful as you assess your own situation, opportunities, and potential payback. When you see that 4-month payback, does it make sense to consider Sage Intacct? Whenever you're ready, whether that's 3, 6, or 12 months, we're here to help you. It's getting to the end of our time here, so I'll follow up on the questions I've seen come through directly with you. Also, if you're interested, we'll help you run through your own calculations, so request that in the survey if you are. Also, if you complete the survey, you'll be entered into a drawing for a pair of AirPods Pro. Again, thanks so much for your time. I really appreciate it. And also, thank you for being part of the Sage family. Have a great day.